But to talk about some of the issues driving us, we're delighted to be joined by our good friend Todd Crosland. Todd, CEO and founder of Interbank FX. Todd, thanks very much for being with us here in the studio today.
Thank you, Bob.
So, Todd, let's start off talking about this U.S. subprime problem and exactly how widespread we are. I mean, let's employ the old baseball analogy. Are we in the 7th inning of this, 8th inning of this, or do we still have a couple of relievers warming up in the bullpen here?
Well, it's kind of a mixed signals we're getting. With earnings season just concluded, you'd think that everybody would have their estimates out for their write-downs, but those estimates seem to double month over month. And so maybe the other shoe hasn't dropped because there's really not an accurate way to price these structured financial instruments. So we may not have heard the end of it yet.
What sort of thing do you think traders are looking for at this juncture that's going to tell them that we've really started to move into the stretch drive, or is it simply going to be, relative silence, the absence of any more disastrous announcements?
I think the absence, hopefully we're through this, and the major banks have taken appropriate write-downs, and if we hear more about it, we'll have further turmoils in the financial markets. But if all the bad news is out, then hopefully we're going to go up from here.
Yeah, and how does that then play out for the dollar? I mean, we've got the dollar trading at record lows versus the euro. We've got the dollar continuing sort of a fitful performance against names like the pound, as well as some of the other safe haven currencies that are out there. Is the dollar just going to continue to sort of clunk along at the bottom here?
Well, it's kind of a two-edged sword with the dollar right now. In the financial markets, when there's great instability in the U.S. financial markets, and with the credit crisis that we're experiencing, that puts pressure on the dollar. It also puts pressure on the carry trade. And so when there's financial instability and there's more risk in the market, people, since we saw at the end of February, beginning of March with the Shanghai exchange correction, when that sent tremors through the financial markets, everybody jumped out of the carry trade, started to unwind those positions. Sure. And we've seen that with our own customer base worldwide in July, particularly August, with more financial instability, with more risk in the market. We saw people jumping out of that carry trade, and then we've seen pressure on the dollar since then.
Sure. And have we seen a resumption of the, there were some signs that some of, for example, the Japanese retail customers who might have been playing that yen carry had decided to kind of bail out of the market. Do you get the sense that they have come back into this market and that they're ready to resume some of their activities?
I think we can. It's all based on the risk in the market. When the traders are seeing risk in the financial markets, we saw that in February, we saw it in July and August. When the Dow approached back to 14,000 again 2 or 3 weeks ago, we saw the yen back at 117. And as soon as we had some big corrections, some bad news out of the major banks in the U.S., then people started to unwind those carry trades again. But we'd really view, if the financial markets would stabilize, if we start going where there's not as much risk in particularly the U.S. markets, the people will jump back into that carry trade. Their risk appetite will increase then.
Yeah, and interestingly, though, to that point, the U.S. equities market, while it's had some sort of short-term hiccups over there, we're still trading very close to record levels. We haven't seen the kind of fallout that you might expect to see associated with. I mean, if somebody's casting the subprime crisis in the same terms as, say, the long-term capital problem of almost a decade ago, I think you'd expect to see the equities market here take a much bigger hit. It simply hasn't happened here. There's been more resilience.
Correct.
And is that something that's going to be perceived as a prospective risk factor down the road, or is that a comfort to most foreign exchange traders at this juncture?
Well, year over year, as you mentioned, NASDAQ's up, over 15% for the year. The Dow's up over 8% for the year. And so if you look at year over year, it hasn't been a bad year, but there has been some extreme volatility. And I believe if we can get the credit markets and take this risk out of the markets, then we'll continue on a more stable basis with the market. Then that will affect the value of the dollar as well. The weakness in the dollar, there's a lot of underlying issues with the dollar, and right now it's the interest rate differential between the other G7 markets around the world. But I think if the financial markets would stabilize, that would also help bode well for the dollar as well.
And you know, part of it's clear that part of what's driving the euro strength that we're seeing today and over the course of the last several trading sessions has been the outlook for the ECB. The ECB seemingly expected to maintain at least a very hawkish bent here. Is that going to continue to keep, presuming that the ECB at their next meeting indicates that that they have no intention of beginning to cut rates and that their bias remains to continue to be aggressive about raising rates? Is that going to keep the pressure on the dollar and prevent it from making any kind of a rebound?
You know, it could. The ECB also is in a peculiar position. Their back's almost against the wall. If the dollar is at an historic low against the euro, that's going to hurt the European Union's exports. Mm-hmm. And so if they continue to raise rates, that's going to continue to put pressure on the dollar. And so the euro goes up, and it will impact their economy. So they're kind of damned if you do, damned if you don't. So they're trying to keep a tight rein on inflation and inflationary pressures, but they also have to look at the value of the euro.
Got it. Well, let's take off the interest rate outlook for a couple other. Let's start with the Bank of Japan. You know, given the economic data that we've seen, leading indicators coming in essentially dead flat, I've got to imagine there's no wiggle room for the BOJ to even hint that it may be trying to raise interest rates at this juncture.
Yeah, there just hasn't been signs that that economy is giving us any inflationary pressure. So I think there's no good reason for them to consider right now.
What about the U.S.? We've had 75 basis points in rate cuts over the course of the last couple of months. Is the Fed done at this juncture? Are they going to wait and see if the cuts that they've already enacted are going to start evidencing themselves in the market, or do they have to remain fairly aggressive here about trying to keep jump-starting the U.S. economy?
Sure. Well, we've had some good news for the economy the last week. GDP was up. Non-farm payroll was up considerably last week, and but we have this underlying credit issue. Yeah. And so there is continued vigilance, I think, on the Fed to look at the underlying economy. Although there has been some good news, I think the Fed fund futures is betting a 60% chance of a further quarter-point rate cut by the end of the year. So we'll have to watch the data as it comes out weekly, and particularly how this credit crisis unfolds.
Yeah, well, with all these moving parts, I mean, your business is you know, uniquely leveraged just to volatility and activity, things like that. I mean, is Interbank? I mean, do you guys just, you know, open the doors with a smile on your face each and every day?
We do. You know, August is typically a slower month for currency traders around the world. People go on vacation in Europe and Asia as well as the U.S., and that was our biggest trading month in our history. Wow. And October almost reached that same record. So volatility is the friend for the foreign currency trader. So good news, bad news, surprises, you know, we like it all. Great. Well, continued good luck with your business. And Todd, I want to extend our thanks for joining us here in the studio today. We've been talking this morning with Todd Crosland, the CEO and founder of Interbank FX, always a good friend to us here on Foreign Exchange.